Thinking Byzantine here, and today we'll be talking about the Global X Robotics and Artificial Intelligence ETF, or BOTZ. Now for a quick disclaimer, I'm not a financial advisor, this is all my own opinion. Please do your own research before investing. The information that I'll be using was from January 2nd or before, and I do own a stake in this ETF. BOTZ's methodology is quite simple. It's an ETF that focuses on robotics and AI, which means the companies that are in this ETF must make a significant portion of or have stated the purpose of working in AI and robotics. These companies must be listed in a developed country, and they must have a market cap greater than $300 million, which means no microcap companies. Now here are some stats for BOTZ. And the important numbers to me right now are its expense ratio at 0.68%, its average PE at 38.59, and its current share price at $33.08, and its average annual returns over the 5-year period, which is at 21.66%. Now, for average PE, it's the average PE of all the stocks in this ETF, just letting you guys know real quickly. Now, let's continue on into the top holdings. We have Intuitive Surgical, NVIDIA Corporation, Fnac Corporation, Canancy Corporation, I hope I said that correctly, and ABB Ltd. Now, here are the sector weightings of this ETF. And as expected, it's definitely going to be more tech and industrial heavy at 44.2% and 40.3%. But there's a bit of healthcare, consumer discretionary, energy, and other / cash, which is at just 0.2%. All in all, this ETF is very sector heavy in tech and industrial, like I said earlier. So I would not recommend making this ETF your entire portfolio if you're going for a bit of diversity anyway. Now here are some alternatives to BOTZ. We have RQ and Robo. Now important numbers, of course, is the expense ratio, and they're both higher than BOTZ at 0.75% for RQ and 0.95% for Robo. Now these fund sizes are quite similar in size, in the $1.6 to $1.7 billion range. But another thing to look at is the average annual returns over the 5-year period, and RQ has been killing it recently, as the average annual returns over the 5-year period is 36.95%, while Robo is at 21.21%. Not dollars, sorry. There's a bit of a mistypo, but continuing on, we have BOTZ versus RQ, and as you can see, RQ has been demolishing it recently. They've clearly beaten BOTZ. And here's BOTZ versus Robo. As you can tell, they both have similar track records, but BOTZ edging them out. Now, why would you invest into BOTZ over something like RQ, which you have seen recently has been beating BOTZ? Well, for starters, there's no Tesla. And for those who don't like Tesla, think it's overvalued and overhyped, BOTZ may be for you. It's a play on growth of AI and robotics, and AI is growing rapidly at over 40% a year, and robotics is expected to grow over 25% a year, according to some research that I have done recently. Now here's BOTZ versus SPY since its inception. And as you can tell, BOTZ has been outperforming SPY since it was first formed in 2016. Now, why would you not invest into BOTZ? Well, it's a high expense fee for a non-active fund, and that means that they don't actively buy and sell stocks like RQ does on a day-to-day basis. They do it once per year. Now we have a low yield. For those seeking yield, BOTZ may not be for you. And it has a high PE, which I noted earlier, which means some of this growth may be priced in. Now, like and subscribe for more of this type of content, and let me down in the comment section below, what do you think of BOTZ?